So today we are privileged to have one of our consultants on the platform called Silvana Wanjiru. Silvana is from Capital Register. So this session was convened with Invest in Africa and our consultant on the platform. Invest in Africa is a private-led initiative that working towards empowering SMEs through access to skills, access to markets, and access to finance. As an organization, we are a network of multiple diverse stakeholders. It's one of the reasons that we say we cannot able to achieve this alone, but we work with various stakeholders. So some of our stakeholders are multinationals, large local corporate organizations, our SMEs, our financial institutions, and development partners who share the common purpose of empowering enterprises and creating positive impact. So as an organization, we believe that we are a catalytic social and economic development organization in Africa, and we're passionate about shaping the next generation of African global companies. So why are we passionate about encouraging our SMEs to become global, to become big? It's because we believe that our SMEs are the source of, they are driving the source of driving the economy in Africa, driving economy in Kenya, and they're the ones who employ a majority of our people. So as an organization, we work in private sector and catalyze SME growth in 3 ways. We integrate credible and vetted SMEs into corporate multinational supply chain. So when you become an Invest in Africa SME, then we go through the onboarding process. That onboarding process is a process for us to actually ensure that you are a credible business. It's easier for us to recommend you. So we encourage our SMEs to finish the onboarding process. We also build a long-term capacity of SMEs through better access to skills and finance. So this is something that we have been able to do. We just finished up a project on access to finance and access to skills. Does it mean that we will not continue to do it? This is our core work. We actually keep on engaging our SMEs to build their finances, to make them bank ready, to make them business ready. So that is our other way of working with our SMEs. We also advocate to improve the investment climate and shape policies in countries where we operate in. So as an organization, we don't only operate in Kenya, but we also operate in other countries. Our mission and vision as an organization is that our vision is to lead a network of accelerating trade and investment with small and growing business in Africa. Our mission is to empower enterprises to create sustainable jobs by improving access to skills, access to markets, and finance. Our purpose is to create prospering African economies through sustainable development. So that is our purpose, that is our driving goal, that we have to ensure that our African businesses actually are sustainable at the end of the day. As I mentioned previously, we operate in various markets. So we have an office in Ghana, we have a project in Mauritania, we have an office in Kenya, and we currently have an ongoing project in Uganda. We have an office in Senegal. We have in Guinea, we have a project that is ongoing. In Zambia, the same thing. So that is how we get into various African markets. We start with small projects or big projects, work there, and then we realize we actually keep on growing as an organization. Our intervention for SME empowerment is through access to markets, as previously discussed. Our other pillar is also access to skills through Biashara Academy. So we have a platform called Biashara.now. So through Biashara.now, we are able to provide SMEs with access to markets, access to skills, and access to finance. Access to finance, we work with our partners who are the bank partners, financial institutions. Currently, we have Stanbic as our partner. We have Equity Bank as our partners. And we also have various other microfinance that we are working with to ensure that if an SME is not accessing finance through every other financial institution, which would be the bank, then what would a microfinance be able to do? So this is what we do. And through Biashara Academy, we ensure that our SMEs can actually network through Biashara now. And our Biashara Academy has various topics, various sessions that we have been able to do, that you can just go there. It's a virtual library. You can go there, understand, look at what we already have on the platform. So that is what we have on the platform, Biashara.now. Our impact in Kenya to date is that we've been able to create 82,300 jobs. We've been on the platform, we have over 5,000 suppliers. So some of our suppliers are also farmers. We have farmers on the platform. We have various SMEs on the platform. All through that, what we've been able to do, our other impact is we have been able to train over 4,000 SMEs who are on the platform, and access to finance that we have been able to facilitate to ensure that SMEs have been actually able to access is 7.9 million US dollars. So that is our impact as an organization. So today's session is about SME compliance. Why are we running this session? Remember, initially we said that the purpose of the Biashara now is to ensure that the SMEs are credible, vetted, and actually exist. So towards the end of the onboarding process of Biashara.now, we realize that most of our SMEs don't have documentation. They're actually struggling with the law. They have penalties, fines on things that are easy to work with, things that can easily be done. So that is why we're having this session. We are making sure that as an SME, you're compliant. You are able to do your business legally in the right way. So that is why we're having this session. And it's why we brought in an expert who is called Silvana. Silvana is the Capital Registrar's team lead with over 15 years of experience in capital markets, company law, legal, and corporate governance. She's a CPA and CPSK holder, among other qualifications. Silvana is passionate about corporate governance and board of directors leadership. She combines her experience and passion to deliver excellent services. She's an expert on startups. So startups and intellectual property, among others. I'm sure that we've been able to see that there are laws that are being passed around on intellectual property. So Silvana is very knowledgeable in that area. She's very knowledgeable on what you need during the registration of your business. What are you struggling with? So she's also an advocate and commissioner for oaths and notary public practicing in Nairobi. So that is Silvana, and she'll be taking us through this session, explaining to us the need for being compliant. Silvana, welcome.
My name is Silvana, as I've been introduced. I work with SMEs on a daily basis, helping them with compliance of different issues, including business formation, compliance with company law, intellectual property, labor laws. So in this session, we are going to cover a bit of everything. And my hope is that you will participate and let me know which areas are of interest to you, because the compliance is really wide. So I'll start with statistics that more than 65% of businesses in Kenya are not registered. So that means that 65% of businesses cannot access, among others, business accounts, because to open a bank account, your business has to be registered. They cannot even access something like Safaricom pay bill or till numbers. They cannot access funding. They cannot access government tenders. They are not able to register for access to government opportunities. And that's why when we start our presentation, we cover different areas of business formation. A little bit about us. Capital Registrars is a firm that offers advisory, training, and consultancy in compliance, governance, and businesses with a special focus on growing businesses. Our tagline is that we combine experience and passion for SMEs to deliver excellent services. Our core services that we offer are compliance services, company registration, company secretarial services, intellectual property registration, corporate governance, compliance, and governance consultancy. So to start the session, we'll start with business formation. How do you go about establishing a business in Kenya? So there are different ways to do that. First, there is what we call sole proprietorships. There are partnerships, limited liability companies. For partnerships, we have general partnerships and limited liability partnerships. So what is a sole proprietor? A sole proprietor business is a business that is only owned by one person, that is the owner. So ownership, only one owner, and to register, you register as a business name on the eCitizen platform. So first you have to conduct a name search on the eCitizen platform, put in your details such as your name, your ID, your PIN number, the kind of business that you're going to carry on. Sole proprietorships are limited to one kind of business. So if you say general supplies, that's very wide. So you have to say what you're supplying. The main disadvantage of a sole proprietor is that it's one with the owner of the business. So there's no difference between you and your sole proprietorship, and the debts of the company are similar to your own debts. The main advantage is that it's simple and the compliance requirements are minimal as compared to, let's say, a company. Yes, so the advantages are that it's easy to set up, owner maintains 100% control and ownership, and does not require separate tax filings. So the PIN that you have for individually is also the PIN of the company. So the main disadvantage is that the owner is personally liable for the debts and obligations of the business. So next we'll talk about partnerships. As the name suggests, it's a partnership between you and other people, and it can come in a form of a general partnership, a limited partnership, or limited liability partnerships. The most popular form of partnerships that people establish is a general partnership. Limited liability partnerships are still new in the market, and therefore many people do not know about them. But they are very effective in terms of limiting liabilities for the partners. So what is a general partnership? All are general partners, meaning none is, the liability is not limited to any of them. It's easy to set up. You register a business name and just input the partner's details, the name of the partnership, and you're ready to go. For a general partnership, even if it's not a requirement, we would still advise that you enter into a partnership deed with your partners, because they are a common form. They bring a lot of conflicts between partners. We have seen that a lot of times, and therefore it's always good to have a partnership deed which details things like profit sharing, when one person wants to exit, if you started the partnership together and one of you is no longer available, how do you treat partners who work in the business and partners that are silent, that maybe are still in employment elsewhere? So how do you treat the fact that one partner is 100% in the business, but still you put in your capital. So general partnerships, in my experience, has the highest number of conflicts among partners. So for this one, we would highly encourage that you enter into a partnership deed with your partners, and that is before you set up the partnership, not after. So next one is a limited partnership. This is where one or more general partners have limited liability. Limited liability simply mean that this partner is not liable for the debts of the partnership. General partners will participate in management and have 100% liability. For the limited partners, they do not participate in management and do not have liability beyond their initial capital contribution. So then we have what we call limited liability partnerships. This means that all liability for all partners is limited, and all partners participate in management, and they are liable for personal negligence of employees working directly under them. The partners are not liable for negligence of other partners. So in this one, still the partnership, when they are doing their taxes, they'll still be required to do individual taxes for the partnership and for the partnership as a whole. So let's talk companies. Companies, there are three main types of companies that you can establish. The first one is a private company, which is limited by shares. This means that the shareholders of the company are only limited to the number of their shareholding. Then there's company limited by guarantee. A company limited by guarantee simply means that they are mainly used for not-for-profit, and it just means that the person establishing the company will give a guarantee as to how much liability they'll have. So if they say they are only liable to, let's say, 100,000, this means when the company is wound up, the only guarantee they have on the company and how much creditors can get from them is only 100,000. Publicly limited companies are companies that have a certain number of shareholders that exceed what is required by a private company. Some companies by nature are required to be public. For example, companies that are listed on the stock exchange are definitely public limited companies because of their nature and because of the number of members that they have. So the company that we'll maybe discuss the most is a private limited company, because that is the company that most people tend to register. So as we have said previously, liability is limited to the capital contribution. What does this mean? If your share capital in the company is 100,000 and you have already paid 20,000, the only liability you have is 80,000. That is what limited liability means. I believe most businesses should be established as a private company because, as you know, a lot of things happen in businesses, and therefore you do not want liability that you as the owner of the business carry out 100% liability. And therefore, it's always encouraged with the growth of the business to register a private limited company. I don't know how many of you have registered limited companies. It's a number. So for registration of a private limited company, the registration is done on eCitizen, which, as you're aware, right now is a government platform that has Most of the government functions are moving online. So if you would like to register a private limited company, you go on eCitizen and you conduct a name search, and then you will find prompting questions that will assist you to register the company. So the requirements is directors, number one. The changes that came with the Companies Act 2015 was that you could be a sole director and a sole shareholder. Previously, we know that most people added directors in their companies simply because you are required to have more than 2 directors. So you will also need to state the shareholding of the company, and every company is required to have a registered office. By registered office, we don't necessarily mean a physical office. It means that an address that the registrar would be able to communicate with the company or any other government entity. So what is the company limited by guarantee? As I've said, it doesn't have any shares or shareholders. It's owned by guarantors who agree to pay a certain amount of money towards company debt, and it's mostly formed by non-profit organizations, NGOs, and charitable trusts. So next we move to the topic of compliance. So the first session we've covered is for business formation and different kinds of companies, how companies may be incorporated in Kenya. And as we have seen, at least only more than 65% of businesses in Kenya are still not registered. So that is why we started with business formation. I don't know if anyone has a question. Okay. Okay, so let us continue. Before I talk about linker business, I will generally talk about SME compliance as a whole. And when we talk about compliance, there are things that you have as a company or a business to comply with at least annually. There are those that you comply with monthly, even daily, quarterly. So for most companies, you will find that they are registered, they have industry-specific compliances. For example, people in the hotel industry have a lot of compliance requirements from different bodies, like you'll find the local governments, the tourism bodies, they have Kenya Revenue Authority. So for this one, you have to actually check which industry you are in so that you can see how you need to comply. But annually, you need a business permit from the local government for your workstation. I know most of you see those local council scaries that go around looking for business permits. So annually, the business permit runs a calendar year. So it doesn't matter if you apply for your business permit in January or you apply in September or December. It runs from January 1st to 31st December. So this means it's always important to take your business permit on January 1st, because it doesn't matter if you do or you don't. And then monthly, you have taxes, especially pay as you earn if you have employees. During business registration, they'll ask you the number of staff you have. For pay as you earn, it doesn't matter even if you only have one member of staff, you have to register for pay as you earn. Then we have a value added tax. The threshold is 5 million annual revenue. So you have to register for value added tax. if you're registered for value-added tax, then you have returns to file before 20th of every month. For many SMEs, this is a serious issue, and it's an issue that can lead to a business being closed. The fact that companies register for VAT when they're registering the company, or you go to the cyber, you tell a guy to register for your business, and they end up putting for you all of these obligations, and then you are unaware. So one day you want to apply for tax compliance, and KRA is like, you haven't filed your returns for the last 5 years. So it's always good to engage a professional to register for you, your company, simply because you would be saving little money, but may end up costing a lot, because some of these people, they are not aware of what they are taking. So you might find yourself with a lot of obligations. As I said, the threshold for VAT is 5 million in annual revenue. So if you have not reached that annual revenue, there's no need to register. But once you register, make sure that you file your returns before 20th, or you could contract an accountant to do that for you. And then we have the issue of NHIF and Nssf that also must be done monthly by the company. You are required to register for NHIF and Nssf if you have employees in your business. So once you have registered for NHIF and Nssf, then you must do monthly returns. Annually, if you have a company, then you have to do annual returns at the Register of Company. And you have to do returns that are required by KRA before the 30th of June. I hear many people, when I ask them, have you filed your annual returns? They are like, yes, we have filed, but mostly they are referring to KRA returns. But you are also required to file annual returns to update the registrar on if you have changed anything during the year in terms of directorship, company secretary, shareholding structure, or registered office, or updated your postal address. So that is why you have to file annual returns by, depending on when your company is registered, 1 year later. So for taxes, I always advise companies to get in touch with a tax expert so that they can see what kind of compliance is required. So I'll come back to Link a Business. Link a Business is especially for companies that were registered before 2015. These are companies that were registered under the old regime that are still, because these days all the companies are registered online, so they're automatically linked. But for businesses that were registered before 2015, they are required to update their details to enable the company to manage the company online. This means that you're able to add directors, change the shareholding structure, appoint or remove a company secretary, if you're able to do it for yourself. But this help, what do you require? You need an eCitizen account. If you open your eCitizen account on business registration service, you will see a list of all the companies that you have. So how you manage the company is you link on the company, maintain a company, and then you will see all of your details. So we can move forward, Lynn. Yes, so I've talked briefly about the annual returns. An annual return notifies the registrar of the status of the company. That means if there are any changes in registered office, directors and shareholders, as well as any changes that I've made on the company. So for a new company, it's 1.5 years after incorporation, and then from that date to the next year. It's available on the BRS website. The cost is 1,500 for penalty for each year not paid. So one of the issues that most companies will ask about is change of officials. During the time when most companies were required to have 2 or more directors or 2 or more shareholders, a lot of people registered businesses or companies with people just because to meet that regulatory requirement. But now that it's no longer a requirement, you may want to know how do you remove a director. Sometimes you can't trace the director, they can have moved or they are no longer aligned to the business. And also there's change of shareholding structure. For example, if you want to add your shareholding or allot new shares to different people. So the question is always like, how do I, especially the question of removing of directors. So how do you change shareholding structure? How do you transfer shares from one person to another? So what you need is a share transfer deed. A share transfer deed is, I don't have an example, but it shows who is transferring the shares, how many shares are being transferred, what is the value of, how much are you, for example, let's say 10,000, so it will show what is the value of the shares being transferred, show who is transferring, who the shares are being transferred to, that is the transferor and the transferee. And then once it has been signed by both parties and properly witnessed, it's assessed for payment of stamp duty. The rest of the process is handled online on eCitizen. Something else you must have is a board resolution approving the transfer of shares and interim annual returns to notify the register of the share transfer. At the end of the process, you will get a CR12 showing that the shareholding structure of the company has changed. What is allotment of shares? Allotment of shares simply means there are available shares in the company that can be allotted to a new shareholder. So what you do is file a return on allotment. So if you go on the eCitizen platform, and you can see a place where it's written either existing shareholders, or you'll have to add the shareholder, put all their details of the shares. So you also require a board resolution to approve the allotment and interim returns to notify the registrar of the changes.
Maybe if we could share on the chat box what we are hearing or what we are learning from the conversation. Brian, would you like to share what you're hearing from the conversation or what is standing out for you?
Sure.
Okay.
Right.
Go ahead.
Right. So just going to mention that more or less what I've gotten from the talk is that the registration and more or less getting permits and all this paperwork is more or less the first step of setting up a good SME, at least here in Kenya. So I think I've already sorted that out on my end. So this I was just here to more or less confirm if there's anything I had missed out.
Okay, thank you, Brian. That's so good to hear. Gabriel, your hand is up. Go ahead and speak up.
Sure. Good morning, everyone. Okay, I think I just wanted for clarification and also to emphasize about the KRA returns. Okay, they said the minimum of 5 million, but just to tell member that sometimes if you have a registered company and you do business with the company that can withhold your tax and then submit to KRA, definitely you are obligated by default. So we should also take note of that. And again, maybe when Sylvia come back, just to clarify on the share that are being maintained by the company, how to do the return. So I was trying to explain something I had raised previously for her to clarify. Maybe she'll clarify when she comes back. Thank you.
Thank you, Gabriel. I can see Silvana is back. Silvana, maybe you can take Gabriel question.
So you mean unallotted shares?
Yes, unallotted shares, exactly.
Okay, so when you're filling out your returns, you only fill in the members that have taken shares. So you will show like maybe the total number of shares is 100,000, but you've only issued 30,000. So you will show there's a place where you write the share capital of the business. So you will put the full share capital, and then there's a place where now you show how the members have taken the shares.
Okay.
Yes.
For instance, the nominal share capital issued is 50, then
Yes.
the remaining
Yes.
50 should also include the form as an.
So if the total shares is 100,000, when you are indicating the nominal capital, you will indicate all of the nominal capital.
Okay.
But now where the part for shareholders, you'll only indicate how many shares have been taken by the members.
Okay.
Yes.
Thank you.
Okay, thank you. So now we are talking about change of directorship. How do you appoint new directors to the company once you have identified that you want to add a new director for different reasons? Could be they are coming in as a major shareholder, or they have a skill that you would like to add to your directorship. So how do you add them? First of all, of course, you have to get a board resolution approving the director, and then you will be required to give all of the documents. That's the PIN, the ID, and the passport photo for all of the directors. You will also be required to file a notice of appointment of the new director and the notice of residential address. So there's a requirement under the Companies Act that all directors have to show the exact residential address where they live. And then we have the interim returns notifying the registrar of the requirement of the appointment of a director. At the end of that process, you should get a new CR12. This process is also carried out online on the BRS platform. The only way you know you have added a new director is that they'll be on the platform and they will be indicated as a director in the CR12. Lim, you can move to the next slide. So a hot question is always, how do I resign as a director? This means that you are added as a director either to fulfill a requirement, or you're in a business you're no longer interested in. Why should you resign as a director in a company that you're not fully involved? Because maybe we will have another session where you will see the duties and the liabilities of a director in a company. Have a lot of obligations. So if you're not in a company that you're aware if the company is compliant, number one, or they're carrying out the business above board, or they're complying with different regulations, or they're carrying out a business that you are not interested in, or that requires violation with the law. So it's always good to go on your eCitizen platform, on the BRS website, and see how many businesses are you listed as a director. Do you still want to be a director in those companies? Do you know what is going on? Do you know the risk of being a director of a company that you don't know what's going on? For example, You've seen some of the companies that have been involved in shady deals. Some of the people listed as directors may not even know what is going on. So for me, I'd advocate that you check all the companies you're registered in and resign if it's a company you don't know what is going on. Because one day you don't want to wake up and find your name on the newspaper as a director of a shady company and you have no idea what's going on. I know people who have woken up to find their names in the newspaper of directors behind a certain company that they were just listed as directors, but they didn't know what was going on. So one, if you realize that you're a director in a company that you don't want to be involved in, the first thing you do is write a letter of resignation. And also you're required to write an affidavit of resignation to confirm that you're no longer interested in the business. Resigning as a director does not mean that if you have shareholding in a company, that shareholding ceases. It just means that you are not willing to have the liability of a director of a company, because the liability, it's a heavy liability to be a director of the company, especially with the onset of Companies Act of 2015. So you're also required to file a notice of cessation of office of directors, have a special resolution or a board resolution approving the resignation, and do interim returns notifying the registrar. All of this process is carried out on eCitizen. You can do it by yourself, or you can get a professional to do it for you, so that you ensure that your name is no longer listed as a director. So I also wanted to highlight maybe things that a lot of small companies are not aware of, that you should register for Nssf and NHIF as an employer. This means that the people you employ, you need to remit their Nssf and NHIF to these bodies. So you register as an employer if you have a small business. It doesn't matter if it's a sole proprietor or it's a company limited by shares. You fill in the prescribed form and submit it to nearest Nssf office. This is a pretty straightforward process that should be done within a day or two. What do they require from you? They need your certificate of incorporation and a KRA PIN certificate. You will also want to know that for Nssf returns, you need to do them by 15th of every month. And if you don't do Nssf returns, then it's 5% interest per month. Some of the companies that you tender with will always ask you to give a clearance from Nssf, and it's always important to make sure that you do the payments and file the returns every month. If you're not able to, always get someone to do them for you. There are people that do this at an affordable rate for every month. Yes, so as I said, returns must be filed before the 15th day of the month, and payments done by the 15th. There's a penalty for late filing and payment. So we have NHIF as well. Register for NHIF as an employer. And you need to file the returns, I think, by 9th and pay. To register as an employer, you need to give them the certificate of incorporation, KRA PIN certificate, fill the prescribed format and present it to the nearest NHIF office. This is also a pretty straightforward process. They will issue you with a certificate, and you're also required to file the returns online before the 9th of every month and submit payments by the 9th day of each month. For Nssf, you will pay 200% of the outstanding amount as late payment penalties. The prescribed rates are as per salary scale. Again, always get someone to assist you who will do these things every month. They are pretty affordable options if you're not able to or you think you will forget. I don't know if there are any questions before we move to briefly about intellectual property. Somebody is asking, how do you remove directors? LC Makime is asking, how do you remove directors? Yes, it's very possible to remove directors, but it's a long process. First, you have to convene a special meeting of the company and issue at least 28 days notice to the director through their last known registered address or email. You have to actively show the registrar that you tried to reach this person. So give them, so if it's from today, you give them a special notice of 28 days that you are going to remove them as a director in a meeting that they are invited. So if they don't respond, you have done your notice, convene the meeting, do the meeting, pass the special notice to remove the director, and then file it with the registrar. Of course, the registrar is it's not going to take it. It's not an easy process because a lot of companies have tried to remove directors illegally, but it's something that we have done before. The key thing is always trying to show that you have tried to reach the registrar, the reasons for the removal. It could be they were removed at the annual general meeting. It could be maybe they did fraud at the company. It's always good to explain to the registrar why you're trying to remove the director, but you can remove director by special notice. There are no other questions. We'll move to intellectual property. As the name suggests.
Can you hear me?
Yes, yes.
Okay, so what happens to their shareholding once they leave?
So they have to transfer the shares either to an existing shareholder or a new shareholder. Possibly they don't want to sell, but it's not possible to remove somebody's shareholding from a company. So it's always very important to think, if you're going to add a shareholder to your business, to think about it. Something that can be done is if in your shareholders agreement, you've agreed to transfer shares upon something happening, then it's always good to let them sign the share transfer form at that point. Because there's entirely no way you can take someone's shares from them.
So it's important to have a shareholder agreement at the beginning.
Yes. So let's say if you are giving them shareholding because they contributed some capital to your business, but after payback or something, you agreed that they leave, then it's always important to have that in writing and them to sign an undated transfer form.
Okay, maybe you can touch on that when you're dealing with intellectual property, because sometimes you have shared developments that you've done, and
Yeah.
it does affect when people decide to split up.
Yes, it does. Thank you for that question, George Maina.
Thank you. During a previous training which I underwent under Invest in Africa,
Yes.
I would get clarity on the issue of segmentation between board of directors and shareholders. I think through that meeting, it was made clear to us that the board of directors do not necessarily have to own shareholding in a company. They give the strategic advice and general guidance for the success of the company, but they do not have to own the company. The company can be owned by shareholders, but the board of directors only provide the strategic direction. So, could you elucidate on the general position of board of directors versus shareholders?
Okay. Thanks, George, for that question. So, George is asking to get a clarity on the difference between a board of directors and shareholders. So, a shareholder is somebody who owns part of the company in terms of shares. So, the most important thing in shareholding is actually ownership. A board of director is someone appointed to the company, as he has said, to give strategic advice. But you will find a lot of times when the companies are being registered, because here we are dealing with small companies who may not have access to legal advice at the beginning, at the time the company is registered, and may not know how to separate the two issues. You will find that most companies, when they're being registered, they will put the same shareholders as board of directors. So that is why we are addressing it like for bigger companies who have access to company secretaries, legal advisors, they know that shareholding and board of directors is a different issue. But most of the times for small companies, they almost put it as if it's the same issue. The board of director does not necessarily need to be a shareholder. There is no requirement unless provided for in your articles of association. There is absolute no requirements that a board of director, somebody who is a director in your company should be a shareholders. There used to be these requirements in the old articles of association, where they used to say for you to be a board member, then you must at least have one share. Right now, there is no such requirement. So you can have a director who is not a shareholder. And again, all of these things can also be captured in a shareholders agreement. So yes, the issue of a shareholder and a director, a shareholder simply implies they have ownership in the company, and a director is somebody who leads the affairs of the company and does not necessarily need to be a shareholder. Yes, Mudoni is saying, please remember that even if the shareholder signs an undated share transfer form, the registrar must confirm the transfer of shares by way of calling the shareholder or sending an email to them asking them to confirm the transfer of shares. Okay, sometimes they do, sometimes they don't, but you can circumvent this by somebody issuing an indemnity. Especially a lawyer can issue an indemnity to say this was the agreement between these two parties, and at this particular event has passed, and the shareholder has agreed to transfer the shares if the registrar has to confirm. But what Modoni is saying is true. But again, always seek professional advice. Okay, thanks, George. I think now we can move on, because I can see we only have 27 minutes. So intellectual property by its own nature exactly means that even if we are just briefly going to cover intellectual property by itself is an entire training, because it covers a lot of things. But for now, we are just going to look at highlights. Because I feel like a lot of small businesses are not aware of the kind of protection that they need to get for their businesses and their ideas. So intellectual simply looking at it means something that's developed from your intellect, from either you could have a good voice or you develop a sound that can be copyrighted. You can have a good idea, design idea for your logo, so you can trademark the idea. You can license, let's say you develop very good software, you can license it to third parties. You can also do patents. Patents simply mean something that is novel, it's a new idea. The threshold is very high, so everybody who asks me, oh, can I patent this? Possibly the answer is no, but there are actually novel ideas that needs to be patented. So intellectual properties actually covers all of these things you can see. Authorship means you write a book, you publish a blog, you write an article, you co-write an article, you co-write a book, so that is authorship. Then we have copyright, simply covers things that you can perceive with your senses. We have trademarks. Trademarks simply means you have a good design that you want to trademark. You can have a good idea for product name. You can, for example, you can say kiwi. Kiwi is a name, is trademark. So the idea between intellectual property is that it has to have novelty. Somebody else has not discovered it. You're the first to come up with it. Then we have something we call design patents. That is for design, especially of things like plastics, plastic bottle. You can design your own kind of plastic bottle that you need to get a design patent for. So it covers protection of all of these things, which is design, authorship, copyright, and the law. And in Kenya, we are still trying to get one body to cover all of the things that falls under intellectual property, but you'll find that there are different bodies. There's Skippy, that mainly deals with patents and trademarks. Then we have Kekobo that deals with copyrights, or easy to register if you know how to do it. It's something you can do it by yourself if you have the time, or you can ask somebody to do it for you. So we can move forward. Yeah, so we have trademarks. You can trademark a name. For example, Capital Registers is trademarked as a name. You can register a logo, an identity, even your own name. If you feel that your name can bring you some money, you can register it as a trademark. If you don't register a trademark, then somebody else can use it for profit, for gain, and to your exclusion. So next slide. Yeah, so what is a trademark? A trademark is a symbol, word, legally registered and established for use by a company or product. So it helps to protect the brand name or logos used on a product. We are in an era where I've seen a lot of even innovations around natural products in Kenya. Why do you need to protect your brand name? Because first of all, it gives you legitimacy in the market when you have registered a name. Two, it keeps away people that may want to copy your brand name and use it to manufacture like counterfeit or poor quality goods. There is a time I remember that a certain lady who has been doing these natural products and someone else manufactured a substandard good, and somebody ended up having a very bad reaction to it, and they couldn't prove that that this was not our product. So it's always good to protect your brand name, and to stop anybody using your brand name so that you are not associated with a substandard product. Once you register your brand name, then you're able to say, wait a minute, this is my name, stop using it. My name is associated with a different kind of standard, and I'm not sure that you're taking your goods to the same kind of standard. So it's always important to protect your brand name and enforce use if somebody is using the brand name. How do you register? You do a search. Search is carried out at KIPI. Takes about 2 to 3 weeks. It's always important to do a search, because if you go ahead with the registration, at some point they'll discover that maybe somebody else was using a similar name, and then it will cost you time and money. Then you do an application for registration, after which it will be examined for number one, novelty, or if someone else has used it before. Once it's examined, it's advertised in a gazette that is published by KIPI monthly. So if you go to KIPI, you'll find a journal, kipi.go.ke. Just put it here. So they publish a journal every month. You can check if someone is trying to register some product like yours or a brand name like yours. At this point, if someone can actually oppose you trying to register the trademark. If not opposed, then after 90 days, it's registered and you're issued with a certificate of registration. Yeah, so if you can, once it's this process is long and takes almost 6 to 8 months, because it has to go for advertising for at least 60 days. We have copyright. So copyright mainly refers to works that are in a digital format. So it protects the original idea that has been reduced to a tangible form and includes copies made in the digital environment from being copied without authority. So the enforcement is done by the Kenya Copyright Board, and the duration, especially of literary, musical, or artistic work other than photographs, is period of the life of the author plus 50 years. That's why you will find some of these books are now available for free online, because their copyright has passed. Then we have audiovisual works and photographs, 50 years from the end of the year in which the work was either first made available to the public, first published, whichever date is the latest. Yeah, so for copyright, it mainly deals with ideas, things that you can visualize. But the disclaimer is it has to be reduced to a digital format. The Kenya Copyright Board will ask you to file at least two copies of the works, but now I'm aware they're online. Filing a copyright is the easiest thing because you can do it online, and I think it's something like 800 shillings. Why do you need to file for copyright or for trademarks? Is because if there is ever a dispute, you can always show that you had registered the copyright or the trademark. We can move ahead. So for sound recordings, it's 50 years after the end of the year in which recording was made, and then for broadcast, it's 50 years after the end of the year in which the broadcasts took place. So we can, as I said, this is just a highlight. Intellectual property is broad, and because of limitations of time, we cannot be able to cover, but basically, you can seek legal advice as to how you would like to protect your intellectual property. Remember, most things is intellectual property, and sometimes you may not know how you need to protect it. But if there's ever a dispute, then it's always good to show that you had already registered the works. So we'll also do some highlights on the Kenyan labor laws, especially the Employment Act. I know most companies have a few employees, even if it's 2 or 3. That does not mean that you don't need to comply with Kenyan labor laws. And this is an area I know most SMEs, some, not all, most, some, do not comply with, especially in relations to hours of work, annual leave, maternity leave, sick leave, and housing. So the most important document to have when you're dealing with Kenyan labor law is a HR policy, which you can get somebody in HR to draft one for you that will cover especially these things. Because what happens is if you don't put it in writing, if you don't have an employment contract with your employee, sometimes the judgment against the employers are so high in a way that can cripple your business. So even the reason why we are doing SME compliance today is because non-compliance often affects businesses quite negatively, and you can find your business closed just because you simply missed on filings, VAT filings, or you haven't filed your annual returns, or KRA comes and does an audit on your business, and the penalties are so high that you cannot continue to operate. So the reason why we are doing business compliance training is you need to understand that these things may not be urgent today, but can lead to the death of your business if not looked at. So even the issues of employees, a lot of employees do not give employees annual leave. So they accumulate payments for not giving annual leave, or do not file their pay as you earn. So the day the employee leaves the company, the first place they go to is KRA to tell them, or the business I have been working for has not been complying with these laws. Can you go and check? That's why you will find all of a sudden you've gotten some summons from KRA and you're wondering what happens. But the key thing is try and be compliant. If you are not able to do it by yourself, get someone to do it for you at an affordable price. So for your Employment Act, you'll find that they have regulations of hours of work, at least 1 day of rest per week in 7 days. Then when it comes to annual leave, you need to give your employee not less than 21 days after every 12 consecutive months of service. Maternity leave for female employees is 3 months with full pay. Sick leave is not less than 7 days after 2 consecutive months of service. Housing, the employer shall provide housing to the employee. So the way you circumvent this is when you're writing the letter of engagement or employment, you say that sum will cover is combined for everything that is required to be offered to the employee. So we can move ahead. Yes, the issue of water is also a requirement that you shall provide sufficient supply of wholesome water for use by employees at the place of employment. If it's food, it can be part of the salary paid. And then for medical attention, it's always good to have an Nssf, just in case you're asked about the medical attention you're giving the employees. There's something else called gratuity. You can avoid gratuity if you offer an Nssf to your employees. You can move ahead. Okay, so if you have any question, I know it's been quite a highlight, and we cannot cover everything because even under employment laws, things to do with labor laws, there are so many types. there are like 5 sets of labor laws that you need to acquaint yourself with, things to do with insurance, taking WIBA for your employees, especially in industries that permit. If it's hotel industry, there are so many permits. So it's always, you cannot claim ignorance. So you always must either find out for your particular industry, ask around, seek professional advice, what you need to be complying with, because compliance, as I said, is something that's not urgent today, but very, how do I put it, very costly in the end. So you have, if you don't remove the directors, you need to remove on time. There is a cost to it. If you add a shareholder, they may ask for a lot of money to leave the company, which you may not have at that point. There are entire businesses that have gone down because of shareholder disputes. In fact, many of the companies, large companies that go down, I mean, you have seen things that are in public domain, including Tuskys, recently Naivas, Nakumat. All those businesses have not gone down because they didn't have sales or revenues, but have simply gone down because of issues, especially to do with corporate governance and especially shareholder disputes. So at the beginning of your business, it's always, before you take any step, to consult someone about it. Like, I'm adding this shareholder to my business, they're investing this amount of money, what should I be aware of? But what do we do? Quickly add them and then deal with the consequences later. So my urge is try and think about all the ways you can comply. And it's not just business compliance, there's even environmental compliance concerns. I mean, there's this new issue of CSR and corporate responsibility. Find out how your business can be more compliant. For now, we'll take any questions and any feedback that you have.
Hello, everyone. So I'm just going to share the results of the survey. So we'll begin with the questions that were more tailor-made for the session. So the first question, which is number 8, is your business registered in Kenya? So out of 110 responses, we had 107 saying yes, their businesses were registered in Kenya, and 2 said no, and then 1 said other. Then the next question was choose the form of your business registration. So out of the 110 responses, 32 are sole proprietorships, 67 limited company by shares, 7 of them limited liability partnership, and other are 2. Then the next question was, how long has your business been in operation? 12 have been in operation for less than 1 year. 35 have been in operation between 1 to 3 years. 21 have been in operation 3 to 5 years. And 42 of these said you've been in operation for five years and above. So the last question was, what challenges are you having in your business regarding compliance? 6 was about 6 said that their business is not formally registered. 7 said they need to remove one of my partners or directors. 10 said the employees do not have formal contracts. And then 23 said they have unresolved tax issues. And then 29 said they have other issues. So those are the results of the poll from the survey.
So there's somebody who asked, good morning, Sarah James Bosire, sole proprietor, Eldoret agencies. Recently in the news, there was a legal tussle between some firm and the investor of Please Call Me, which got me thinking, How do you claim rights for an intellectual property? And does the law allow for altering of contracts involving intellectual property, say in case where your idea yields a great success than you anticipated and you feel you need to be compensated more? I hope you touch on that on your presentation. Okay, first, I do not have the available facts about that case. But in terms of altering the contracts involving intellectual property, okay, there's a saying that it's not just enough to have an idea, because you can have the idea, but you don't have the resources to invest in making the idea commercially viable. So I wouldn't really give a straight up answer on this one because I don't have the full facts. But definitely, you would expect that that other firm invested a lot of resources to bring the idea to life. So it's not just, actually the court has ruled on that, it's not just enough to have an idea, but it's the bringing of the idea to life. That's why even you have to reduce it to a tangible form for it even to be registrable. For contracts, contracts are between the parties. If they agree to alter the contract, then that can be done. But definitely, it's always good to include in the contract that you would like to alter the contract in the event that the idea was commercially viable. Again, this one means that it's always important to contact a legal professional. So if there are no further questions, this is our contact. You can contact us by visiting us physically at Royal Offices, Mogotio Road. There is our phone number, and there is our email. We are also on the web, capitalregistrars.co.ke. So if you'd like to contact us, those are the contact details. Thank you very much for sitting in and listening to this particular session. If you would like to remain behind, maybe you can indicate your interest in the chat. Otherwise, on my end, I'll hand over to the Invest in Africa team.
Thank you so much, Silvana. I believe this was a very insightful session for all our entrepreneurs on board. Like you've heard, if you'd like to reach out to Silvana or Capital Registrars, let me just go back a bit so that you can. Yes, those are the contact details. If you are able to screenshot, that would be good. You can also follow them on their social media handles on Facebook, on Twitter, or you can also go through their websites. So at this point, I'd like to pass my vote of thanks to Silvana. Thank you so much for having facilitated this session. I believe our entrepreneurs have been able to learn a lot of things from this session, the things that they were not aware of, or rather if they had issues that were unresolved, at least they have some light on how to go about it. So thank you very much for your time, and thank you for taking time to prepare the presentation and sharing it with us. I would also like to thank all our participants for today. Thank you for making time to join in the session. We will be sharing the link to the session, the recording. Once it's up on our YouTube channel, we should be able to share that with you. And then if you would also like to know more about Invest in Africa and what we do for entrepreneurs, peradventure you have not even finished your onboarding process, you can reach out to us through the contacts that are on the screen, the phone numbers and the emails on the screen. Yes, so those are our social media handles. You can find us on Twitter at IIA_Kenya, on Facebook at Invest in Africa Kenya, on LinkedIn at Invest in Africa, on YouTube, Invest in Africa-Kenya. And you can also visit our website, that is www.investinafrica.com, and also www.biasharanow.com. And then we also have our physical address where our office is. So you can follow us on social media through those handles. And lastly, just to appreciate you for staying through the end. Like I said, if you have a question that you would want to ask Silvana, you can remain behind. Thank you so much and enjoy the remaining part of your day. Asante sana.